morning, everyone. Good morning. Am I audible and visible? Guys, please respond so we can start the class. Thanks, Akshita, for confirming. Good morning. Good morning, Pratyapi. Good morning, Aditya. Okay. So yesterday, good morning, Jia. Good morning. Let me share my screen as well. So we can start. Okay. So yesterday we were starting this topic of business organization. Okay. We first of all did some introduction about the business and technology subject, and then we went on discussing the business. Yeah, sure. Good morning. Please settle down. Just give yourself a quick, let's say, because some students are still joining. So what we can do, we can, first of all, do the revision of what we did in the class, though it was not, much. So let's start with what we were starting. So we were started discussing the business organization. Okay. And what we were doing in the business organization was that we understood what is business organization. Business organization is basically a group of individuals. Okay. Where, they have certain goals. Basically, some have goal related to salary, some have related to profit, some have related to service providing. So different goals in a single organization, and where they work together and they basically achieve results. This is basically an organization. And when I specifically talk about the organization benefits, when you are working in a team, what happens, because there are multiple individuals working together, they are basically putting their efforts together. So if I'm doing a task individually, like if you remember the example of needle which I gave, where if we need to complete a task of creating a needle, it would take a lot of time. But whereas if I basically, divide the work between, couple of individuals and everybody become expert in their work, this will lead to, creating a synergy effect, because synergy says that 2 plus 2 is equal to 5. And what it means is that if I am taking the help of my team, if work is divided and expertise is creating, people are getting specialized, the standardization is creating. In that case, this will create a synergy benefit, and there will be more efficiency, there will be more productivity. Okay. So this was basically the benefits of the business organization, and basically the feature. The feature I itself basically is calling for the benefits. We also looked at the definition of business organization, that business organization to carry out any economic activity. And as I told you yesterday, economic activity includes profitable and non-profitable activity. Like I told you some examples where we were discussing that if you are basically selling or goods, so that would be a trading activity, that would be profitable purposes. But at the same time, if you look at any government activity, let's say providing railway services, there is an economic activity, but not, definitely not for profit making. That is for providing services. Then we further basically started discussing about the different types of organization, and this was the topic which we were where we left about the private sector and public sector. So just an overview, that public sector basically is something where government has a stake, government has ownership. Let's say railways, let's say your public transportation, construction, or electricity. There are many sectors where government is involved, and any percentage of ownership by government, be it local government, be it central government, be it let's say the municipal corporation of the local government, any type of form of government will, if any stake in the project, that will basically make it a public sector. We will also understand the difference between private company and a public company, where students gets mostly confused. So we have to understand what is a sector. Right now we are talking about a sector. It can be an any organization. It's just that government is also involved. That defines the sector. But when we will look at the public company versus private company, one of the most confusing area for the students. So we will be looking at that. So I hope so far no doubt about the public sector and the private sector. Okay. Everyone all clear? People online. All clear, guys? Should we start? Yes. Okay. So when we are discussing public sector, let's quickly cover the public sector slide. There is a public sector slide. So let's quickly cover this. Let me know, people on the online, are you able to see this? Is it visible? Yes. Okay. So what is public sector? Like we were discussing, public sector organizations are owned and operated by the government, either local or national or government agency. So what can be a public government? Here government is getting defined by local or national government. Basically in India, if you take the example of central government or basically any state government, let's say Delhi government, Haryana government. So these are part of government and even government agencies. Let's say I take the example of India or let's say for the Delhi or Mumbai. So in Delhi, it is MCD and in Bombay or Mumbai is BMC. So these are municipal corporation, which are basically agencies, one of the departments of the government. So they will also form part of the public sector. Okay, if they are into any project. Now, advantage of government sector is economy of scale. Can anyone explain me what is economy of scale, or should I explain? Anyone?
So we produce in large quantities,
Mm-hmm.
and therefore the production value,
Mm-hmm.
the cost of producing one unit decreases significantly.
Very good. Very good. So, as your friend basically here said, if those who couldn't hear, let me explain. What is economy of scale? Basically, let's say I have set up a plant, okay, and that plant costed me 10 crore, okay, and then let's say if I am producing one unit from that plant, now you can see to produce one unit, it costed me 10 crore. Definitely, good explanation. Cost advantage in economic scale. I think you have the idea, Krishna. Okay, let me explain what you are saying. So let's say I have a plant and that plant costed me 10 crore and I produced one unit. So you can see to produce one unit costed me 10 crore. But let's say if I produce, let's say 10,000 units, now the suddenly the cost for producing one unit has dropped. If I divide 10 crore divide by 10,000 units, how much that would make? It would be somewhat around 1,000 uh, lakh, 10 lakh. Yeah, it would be 1,000. Suddenly, the cost for one unit is basically 1,000. But let's say, what if I produce 2 lakh units? Now you can see the cost has significantly reduced. Now it would be somewhat around 50, if I'm correct. 50 or what? 50, right? Not good. 50. Five. Okay, okay. 500? No, no, I think 50. Not good at maths. Okay, you are basically taking too much pressure on a business teacher. Okay, do the maths. So you can see the idea is very simple. The more units we are producing, the cost is getting lesser. And this is what is called economy of scale. And this is what large organization take benefit of. Because I'm a large organization, I can play on a cost. I can play on a basically cost basis that I will produce so many units that no, Nandini. Basically, I'm right now considering that the cost is fixed. Cost is fixed. In the short term, cost is fixed. So right now, when we say economy of scale is achieved if you produce large number of units. Okay. I will give you an example. Let's say Britannia, if you are aware, Britannia, which is basically an Indian company, they produce, some toffees, candies. Okay. And they produce it in quantities, let's say crores of quantity in basically let's say within 3 months or like this period. And when they produce crores of quantity, the cost they put up, the plant they have to produce this many toffees is very large. But because they are producing crores of profits, the cost is getting reduced per toffee. Okay, and what the cost of the toffee or the candy is? Only 1 rupee or 2 rupees. Yes or no? Why they are able to sell 1 or 2 rupee toffee? Because they have produced it so large quantity that it reduces their cost. Getting the idea, everyone? We will come to the, when the cost will increase. Okay, this is something we will be discussing in the macroeconomic chapter, Nandini. Okay, make sense? Any doubt, anyone? Yeah, definitely. That is what we say economy of scale, Andani. We say, let's say one unit will take, we will sell 1 unit for 10 rupees. And the variable cost is, let's say, 5 rupees. Okay. So the gross margin is 5 rupees, Nandani. Yes or no? After 10 rupees sale and 5 rupees is the 5 rupees gross margin. Yes. And what we are saying, if let's say we have a 10 crore fixed cost, 10 crore fixed cost. So to recover this 10 crore, we would be, let's say, selling 2 crores trophies. Okay, we will be basically able to recover at 10 crore rupees. Yes or no, Nandani? Okay, now if we, let's say, sell 3 crore trophies, so this 1 crore extra trophy would purely give me my profit multiplied by 5 rupees. Yes or no? This is called economy of scale. Got it? Any confusion, anyone? Okay, economy of scale, please get yourself familiar. Whenever I write EOS, it will be economy of scale. Second, basically, public sector try to fill the gap, basically left by private sector. In a democratic country, if you basically understand what a democratic country means, that where people elect their government, okay, it is normally the case. Let's say if we look at the current government structure across the globe, there are 200 somewhat countries. Okay, not exactly, but 200 something country. And majority of them are basically democratic countries. What democratic country means? That the government is elected by the people. And in these democratic country, it is believed that the economy will be free. Economy will be free. And what economy will be free means that private sector is allowed to make profit. Yes, you heard it right. That profit making is first of all allowed. It's not, you can make profit. If you are in a monopolist, let's say if you're in a monopoly, or let's say you are a dictatorship kind of country, profit sometimes is not allowed by too many organizations. So in a basically democratic country, economy is free, where you can basically run a business and make profits. So private sector will definitely try to go into every sector there where they can make profit. But if a sector is not very profitable, so private sector don't go there. Let me give you one example. Let's say schools, or let's say hospitals. you know if you go to any private sector school or any private sector hospital, it will be very expensive. Yes or no? It will be very expensive. The doctor fee will be in, let's say, in lakhs, if I talk about in Indian rupee terms. Yes or no? But if you go to any public sector, suddenly, this is private sector. If you go suddenly to a public sector school or hospital, suddenly the prices will be very cheap. And the reason for that is basically that government knows that private sector has left one area for poor people, because because of this expensive medicine, because of this expensive medical treatment, or basically expensive schooling, education or medical treatment is not available to everyone. Though education and basically medical is a legal right of everyone. So that is why government try to fill this area for by providing cheap services. Got it? So government sector not only helps basically create a large economy of scale, but they also try to fill the gap that is left by the private sector. Clear, everyone? So far making sense? Now, cheaper services also basically available to significant proportion of society. Yeah, that is what I was saying by basically this example, that because schools and hospital is now only available to elites, if we talk about private sector, the public sector will be basically providing cheap services that make it available to larger size, basically the majority of the population. And that will be the case for most of the countries, that majority of the population will be dependent on government services. Clear so far? Okay, please keep writing yes or no so that I get the idea that you are, understanding. Thank you, Leisha. Okay. Now, disadvantages. We talked about, let's say, government improve, basically creates an economy of scale. We talk about that government provide, cheaper services. But that also leads to one problem. First is that government has funding problems. Government run revenue from taxes. Okay, they collect taxes from the people, from the companies where they run the country, and basically these taxes they utilize in basically providing the services to public. either building infrastructure, okay, infrastructure for the country, let's say building roads, electricity plants, basically keeping law and order in check. All these things is taken by the government. And then providing services, let's say by opening up the government hospitals, by opening the government schools. These all require cost. And this basically, affects the government funding. Government has a limited budget, and government tries to, spend that budget as accurately as possible. They try to allocate to different sectors, but this basically leads to less funds to every sector, because you need to diversify your fund to every possible sector. This leads to less funds. Okay, please settle. So this is the problem with the government sector. Can you please also shut down the door? Yeah, thank you. Now, this leads to basically the problem with the less funding. And second problem, which is basically government sectors are known for, and it is unfortunate, but this is the problem, inefficiencies. That because there is a less funding and because the work has to be provided to basically a large couple of people, the inefficiency increases, and it increases to a very large set of people. So this is again a problem, right? Just a second, huh? Okay. So far what we discussed, that what is public sector organization, that is owned by government. Government has multiple forms. Let's say local government, national government. It can be government agency, let's say municipal corporation or BMC. Let me write this clearly. This is MCD. MCD, yeah. This is MCD or BMC, basically example of municipal corporation of Delhi and Mumbai in case of India. Okay. There are basically advantage of public sector organization, that they basically open economy of scale. What economy of scale is, we just discussed, that you basically open large number of, basically you produce large number of units of goods, and because you produce large number of units of goods, your cost basically reduces, and you can basically make profit by basically getting number of units more. Let's say, as an example, if you have set up 10 crore plant, okay, and cost of producing 1 unit of good is 5 rupees. So if you, let's say, sell 10 rupees good, basically a unit is sold at 10 rupees, so you will be making a 5 rupee profit. Now to recover this 10 crore plant cost, you need to make, let's say, 2 crore units. Okay. Now if you sell the 2 crore units, you will be basically recovering your cost. But the moment you sell the 3 crore unit, basically this additional 1 crore will help you generate the profit, because that is what economy of scale means, that you produce large number of units that helps you basically lower down the cost and basically increasing the profit. Second, basically the example where we fill the gap basically left by the private sector, where in a democratic country, economics are normally free, and because they are free, private sector try to go into every possible area where they can make profit. Example would be school and hospital. That school and hospital basically make a lot of profits, and basically, but they are expensive services which is not available to larger public, and that is why government sector try to fill the area where they can provide services to poorer sector, because that poor sector is not currently taken by the private sector. Private sector is only considering basically the cost, basically the profit that they are making, but this only makes the services available to the elite sector. So that is why government try to provide the services to the poor sector by providing cheap services. This leads to basically government sector's services available to the basically larger population, basically a significant proportion of the society that you can see in multiple countries. The disadvantages is definitely that government has less funding basically because the government runs on taxes. Government collect taxes from people, public sector, and then they spend these taxes on infrastructure, providing services, and this basically leads to diversifying the fund and basically having less fund. And because government is basically doing a very large economic scale, they have to cater a large population. In this case, this leads to inefficiencies. Government sector, unfortunately, are mostly known for the inefficiencies, though their purpose is to provide the services. I hope so far no confusion, right? So this was your public sector. Okay. Now coming back here, we have covered this sector, that private sector, basically for the purpose of profit. Okay. Private sector is not owned by the government, and basically their main aim is to profit making. But there can be some private sector that are non-profit. Okay. So it's not necessary that private sector will always be profit making. There can be certain sectors that will be non-profiting. We'll be discussing the non-profit organization. Okay. And then there are public sector owned by government. And when's government own them? So because of that, they can be any type of government, central government, national government, or basically any government agency. I hope this is clear now. And they basically try to reach the economy of scale by providing services to larger population. And this basically also creates a problem for less funding and basically less efficiencies. So this is the problem with the government sector, or basically public sector major. Now, this was one type of organization. I hope so far, no doubt. Now let's move to another type of organization, which is owner and manager. If I say, let me, create one more slide for this. Where is the slide? Just a second. Okay, no worries. Till the time political interference can also be a disadvantage, definitely, Ashvi. So what happened to profit government does earn? Does it reinvest in the loss-making venture, or are official allowed to earn the profit? Definitely, Nandini. I told you yesterday we were discussing about, Navratna in India. You can see BHEL, IOCL. There are many government-oriented organizations that earn profit. So there is any case where private company work behalf on government company, definitely government companies, basically government basically gives contract to private companies multiple times. So they work for the government organization. Okay. Not sure what is happening here. Just a second. Huh? I think PPT is not working. So much. Oh, no, not here. Let's create a copy of this. Let's paste it here. Let's see whether it will work now. Close. Okay. Not sure. I don't think this will work. I make an edit here. Nope. Not sure what is happening. Just a second, I have to check with the IT. Something is going on. Okay, till the time, please everyone read this slide. Yeah. These are the sectors. Please read this for the time being. Okay, I'm just checking something with the IT. Yeah, please read this. Next. Okay. Can do now. I write something here. Leave it. It's gone. Okay. Okay, one thing. Whatever, just a second. Okay. Actually, we are facing some issue. Whatever I'm writing on the PPT is not getting saved. So what I would require you that I will be basically making the noting, but that noting will not be saved in the class. So you have to be, somehow basically make the notes right now because it cannot stop the class. And right now the PPT is not working correctly. So what you can do, basically this PPT will be available, but whatever I write in the class now, that will not be saved right now. So please do the noting, those especially on the online class. I'll try to see basically after the class whether I can arrange for whatever noting I have done. Okay. Right now it won't be available. I can see that it is not working. Unfortunately, no, don't know why. This is irritating. I cannot even add the slides right now. Okay, no worries. Let's see how it goes. What we were discussing. Let me know, everyone in the online. Are we able to see this? Any issue? If not visible. Oh, sorry, my mistake. It's visible now, everyone? Okay. Now let's come back. Let's not, distract ourselves. So control. We have covered the ownership basically based on the private sector and the public sector. Let's understand the control. Owners versus manager. Basically, let's say, let me give you an example. If I open my shop, okay, and I am basically running the place by myself, everything is basically managed by me. I am basically buying the goods, I'm selling myself, okay, and all the profit or loss belongs to me. Okay. Here you can see that I have opened a sole proprietorship. Those who don't know what sole proprietor means, that I am the one who's running my business. That is sole proprietorship basically. So here the owner is me, and manager is me. Yes or no? I'm the one who's managing the business and I'm the one who's owning the business. That is basically my control and my ownership. That will be sole proprietor. Yes or no? Okay. Now, what about the manager part? Basically, let's say I have a branch. Okay. I own this branch, but that is run by my employee. Okay. So now the manager is the employee, but owner is me. You can see that there is a relation between owner and employee, right? That right now manager, basically employee is running this branch, but who owns this? This is basically owned by me. Yes or no? So this is basically a control based approach where you define the control. Okay. That control will determine the ownership and the managership. If you are a sole proprietor, definitely, if you have a single shop, you will be the one who is basically running the shop, owning the shop. So you are the manager, you are the owner. But let's say if you have multiple branches, then in that case, you could be the owner, but definitely you cannot be the basically manager of all the branches. Though the manager will be reporting to you ultimately, but the main management will be basically with the employees. You will be relying on their work. And this is also known as delegation, that you delegate the work. Yes or no? Clear with the control and manager? Any doubt here? Okay. Now, because we just discussed the owner and manager, now I want to bring to you your attention to one very important concept, which is limited company, not this partnership right now, but limited company. An organization can be a limited company. Can anyone tell me what is a limited company? It's a very, very important concept. And just a little louder. Okay, this is one of the companies. Yes. Okay. What is limited liability?
सर अगर हम कॉन्ट्रास्ट में देखें हिंदी में
हाँ, no
अगर हम
worries.
कॉन्ट्रास्ट में देखें जैसे सोल प्रोप्राइटरशिप सर उस इंसान के पास अनलिमिटेड लायबिलिटी होती है अगर बाय चांस वो लॉस में चला गया तो ना सिर्फ उसका धंधा ना ही उसका बिजनेस बल्कि उसके पर्सनल एसेट्स भी लग सकते हैं हालांकि लिमिटेड लायबिलिटी के अंदर आपने जितना इनिशियल पैसा एक बिजनेस में लगाया होता है आप उससे ज्यादा पैसा ओनर से नहीं ले सकते एक्स्ट्रा
Okay, very good.
लॉस में भी चले गए और जैसे कि 20 करोड़ का बिजनेस है सर 20 करोड़ लेकिन लॉस जैसे कि 30 करोड़ का होगा सर जो आपके का 10 करोड़ है वो आप ओनर से नहीं लोगे वो बिजनेस के नाम पे जाएगा
Okay, good. Okay, let's see what your friends have said. So your friend have actually defined the limited liability very accurately. Have you taken the class before?
Sir, मैं अभी B.Com कर रहा हूँ.
Okay. So let's see what your friends are saying. Transferring authority, limited liability of the owner, Nandini says. Okay, Nandini, your answer is accurate, but I am not sure whether you understand the limited liability. We'll discuss. The owner have limited liability. Now, those who are saying limited liability, I hope what you understand, because it's a very small word, limited liability, but it implies a lot of things. Company has a limited liability. Personal assets of the owner are not used to pay off dues of the company. Very good, Nandini. This is actually what I was looking at. Limited liability for business. Limited is the liability with share owned by the owner or the investor. There are many intelligent students in this class. Okay, I'm surprised. It is a company in which partner has unlimited liability and the company has separate legal entity. Okay, again a very critical point said by Krishna. Personal assets of the owner is not used. Okay, so most of you are correct, but I'm not sure how do you know this, because this is a very typical concept and many students struggle in this area. So limited liability. Let's understand this limited liability. Wish I just could create one more here. Let's see whether we can. Yes, blank. Oh, this is irritating. Okay, I cannot. Do I have any blank page? No. Okay, let's try and get this one. What is limited liability? Let's try on this page only, though I could have, drawn a diagram. So what is limited liability? As you can see, the word itself is showing limited. Basically, there is a limitation that it cannot go beyond. It cannot go beyond. But what cannot go beyond? The liability. Let me take one example. And this is actually a real life scenario. This is a story of, US President, Mr. Abraham Lincoln. Okay, Mr. US President. Very bad writing. So this is a story of Mr. US President Abraham Lincoln. Those who have, read the One Up Wall Street, they know. Otherwise, I'll tell you the story. What happened here? Mr. US President friend got jailed. He had a friend who got jailed. And he actually went to meet this person. Like what happened? He told that, I had a business. I had a business. And I had, let's say, 10 crore assets. And my liability was 20 crore. I basically borrowed money. I borrowed money. And, I invested this borrowed money into the business. But my business got flopped. My business failed. Okay. So whatever money I have taken from, borrowers, from creditors, that money, got lost. And now these people wanted to recover that money because this is their money. So definitely they want to recover it. But the problem was because my business failed, now business only had assets of 10 crore. So these people actually, came to me. They said, okay, we have sold your business assets, but we are only able to recover 10 crore. We want the rest money. So what they did, they basically sold my assets. They basically sold my home. Now my family is on road. And because still they were only able to recover 5 crore, they are still demanding the rest money. So they basically made me go to jail because they said that I basically did not pay their full money. Now I should be going to jail. So Mr. President actually understood his friend problem. He said that, okay, you did a business and this business failed. Okay, definitely there were some mistakes in running the business, but your intention was never wrong. You never wanted to, fraud people. It's just that some business decisions that failed and that basically never made the business successful. Now, it doesn't mean that because you are running a business, your family or your personal assets should suffer. Okay, what it means that, let's say, because if business running is a very risky thing. If you run a business, it's a very, very risky thing. And now if you put somebody's personal life into danger, then how many people would like to do the business? And in the, this is a time of 1800s. Like this was, let's say, around 1800 or basically 1900. So at this time, just think about it, people who are running business, what type of risk they were taking. And because of this, there was a concept developed, which was known as company. And this company concept basically created two very major important things. And I'll show you how and why, you see basically one organization having multiple companies. Let's say Tesla, SpaceX, run by the Elon Musk. They are two different companies. Reliance have, let's say, Reliance Retail, Reliance Refineries, let's say Reliance Geo. We all know that. So there are multiple companies. Why they are opening separate companies? We'll understand this from this example. Because of his friend, Mr. President actually decided to create a company, and company would have two features: that it would be a separate person. Okay, it would be a separate person, and second, it would have a limited liability. Now, what it means? If let's say now this his friend start again and run a business, and he still has this asset of 10 crore, and his liability is 20 crore. Okay, now the liability is 20 crore and assets are 10 crore. Now what will happen? Let's say business again fail. Business again fail. Now if the creditor only able to recover 10 crore and rest they want to recover. And this is Mr. Let's say Mr. A, the friend of Mr. President. Now if the creditor try to go to Mr. A and basically ask, okay, give us money. So he said, do not ask me, ask my company, because you were dealing with the company and not me. And if the creditor try to sue or basically file claim against Mr. A, they cannot, because Mr. A is the owner of the company, but company is a separate person. Because company is a separate person, so case can only be filed against the company and not Mr. A. Mr. A has not committed any fraud. He was running a business. Creditor basically landed the goods to them. So they should be aware about, risk of running the business. There was possibility, that business would get basically bankrupt or business would not be successful. So definitely there was a risk which the creditor themselves should have, known. And that is why now Mr. A cannot be sued. His personal assets cannot be attached. And second thing, company had only 10 crore assets. So creditors can only claim up to 10 crore, not beyond that. And that is what limited liability means, that you cannot recover money, anything above the assets of the company. So your liability will be limited. Got the idea about the limited company and the basically the separate legal entity? These are very important distinctions. Let me give you another example if you are still confused. Let's say this is Reliance. I hope we all know basically which company Reliance is. Mr. Anil Ambani, Mr. Mukesh Ambani, right? Okay, basically Reliance is known for Mr. Mukesh Ambani. Let's say Reliance Oil Refinery. What is oil refinery? They basically dig the oil from the sea, and basically they try to refine and sell it to the multiple governments, or let's say the oil companies, whatever. So this is Reliance Refineries, and this is, let's say, Reliance Retail. Okay, this is again a limited company. This is again a limited company. Reliance Retail is a very successful company. Basically, let's say they are earning 2 lakh crore per year, and here Reliance Oil Refinery is earning, let's say, 1 lakh crore per year. Okay, just as an example. Suddenly in sea, what happens? A blast happens. And the oil gets spilled. The oil gets spilled in the sea. Many people basically die. The sea water get contaminated. Sea environment gets polluted. Now what will happen? Here, because of this, the Reliance Refinery was basically sued for the damage. Okay, and the damage costed, let's say, 10 lakh crore. Now tell me, when the government, or let's say the any environmentalist or anybody would try to sue the government, whether they can sue oil refinery, whether they can sue retail, basically Reliance Retail, or whether they can sue Mr. Mukesh Ambani. Tell me, which? Reliance Oil Refinery, and not basically Mr. Mukesh Ambani or retail. And that is the reason basically the separate legal entity concept is created. It's a very powerful concept. Very good. It's a oil refinery case. Why? Because now company is split. Company has a separate personality. So you can only sue the Reliance Oil Refinery and not Mr. Mukesh Ambani, because Mr. Mukesh Ambani is a separate person and company is a separate person. If I talk about basically in a simple sense, company is a person, an artificial person in the eye of law. So as in the eye of law, company will be an artificial person. And that is why it is act of a person. So company can, so the creators of the government can only sue the company, not the basically shareholder. But there is a condition. Here, let's say, okay, we have to move to the next page. Okay, anyway, it will be deleted. I hope so far clear because this will be removed now in a moment. Okay, all clear now? Because now this will be removed. I don't have a slide extra. Right now, this is some technical glitch. I hope I basically will make sure that this doesn't happen next class. Okay, I'm just removing now. Okay, coming back here again. Now coming back here. See, you can see this limited liability has created two powerful tools, separate person and separate personality and basically limited liability. Okay, limited liability to what? The assets of the company. Now, you know what? This also creates a problem for the owner, because now he knows he can open a company. Let's say he puts 5 crore assets in the company. And what he do? He take a loan from bank for 10 crore. Okay, he take a bank from 10 crore. And his intention was to fraud bank. Okay, his intention was to fraud bank. Now, what will happen? He will take the money. He will say, see, I have an asset of 5 crore. What I will do, or let's say 1 crore only. Let's make this case more worse. He has an asset of 1 crore and he takes a loan of 10 crore. Banks basically gives more loan to the businessman because they believe that businessman will be earning from this money and they will be paying back the loan. So definitely bank would like to, give the loan because they will be paying high rate of interest. Okay, higher the risk, higher the interest. And business, because have a higher risk, bank charges more interest to them. So what will happen? This person will take this loan and now what he will do? He will utilize this loan for his personal work. Okay. He has taken the loan in the name of company. Now what will happen when bank will go and basically try to see, okay, you are not paying the installment. This person says, see, company only had 1 crore of assets. Bank will say, okay, what did you do to the 10 crore? That person would say, okay, I basically utilized this 10 crore, but it did not work. He would basically try to fraud the bank saying that I have utilized this basically 10 crore, but it could not work. But because of the company, he has a limited liability. And now if bank try to sue this, they can only recover 1 crore or maybe less than that. If basically, if 1 crore is actually there. So you can see this creates a problem of, for the fraudsters. They can easily get away from the limited liability. Now, what will happen here? Government says, see, this limited liability is for the purpose of promoting business, right? Because business is risky, so we don't want your personal assets to be attached in these cases. But if your intention was to fraud people, then why we allow you for limited liability? Why should we allow you for limited liability? In this case, you are misusing this. And because you are misusing this, so there is a concept, please understand, which is called lifting corporate wheel. Lifting corporate wheel. Now, those who don't know what is a wheel, let's say I'm a person. Okay. This is a wheel, a kind of a curtain. Okay. This is a kind of a curtain. And this is the people, basically the public. Whenever they see, they will only look at this curtain. And behind this, I will be hiding. And this is what company does. Company hide the owners. Hide the owners. Okay. Behind this wheel. And this is the limited liability and separate personality. That people would only look at this wheel. They will never be able to identify this person. But because this person was, misusing this power by, utilizing the limited liability concept or company concept. So in this case, lawmaker would come basically keeping a stick and they will lift this wheel. They will remove this wheel. Basically, this curtain will be removed and this person will be on display. So what it means, once your corporate wheel is lifted, now you will be personally liable. You will be personally liable. Your personal assets will now be responsible for, recovering the money. Because let's say you have taken the 10 crore money, now you're buying car, flat, but you were supposed to put that money into the business. So this will be basically not a right practice. And that is why those personal assets will be recovered from you, your personal assets, until you basically pay back this loan. And even in case, because it was a fraud, so you will be definitely sent to jail. There will be heavy penalties, many things. So understood the concept about the limited liability company, that you will be given a very important power about separate legal entity and having a limited liability. Your liability will be limited up to the assets of the company. But if you have an intention of frauding basically if you are intending to, misuse this power, so corporate will be lifted. There are provisions in the law, and that's why you will be personal liable. Clear, everyone? Yeah, Harshpreet, you have defined it very clearly. Corporate will be lifted if the intention of the company was to defeat the law. Very good. Bankruptcy, Jeet says lifting of corporate will due to intention of fraud. Very good. Okay. Okay. I think I hope you all got the idea. Now let's basically, go through this slide and let's see what it's saying. Half of the time is basically wasting here. One thing which we were started this discussion between the managers or owners. Yes, Krishna, any query? Not able to see or what? Krishna, any query? No response from you. So please let me know in case there is any query. What happens if law doesn't identify? Then the person will get away. See, there is a phase. There is a phrase which is called, only the only person who is thief is the one who's get caught. Okay, you are saint until get caught, right? Vijay Mallya, very good, G. So you know, Vijay Mallya is actually a very good case. That's actually a very good mention, Vijay. Sorry, G. What happens in the Vijay Mallya case? Until he basically went to UK, or basically he ran away, until it was a case of abscond. He was not considered a fraudster. He was considered a bad businessman. So if that would have been the case, his personal assets would never had been, attached. But the moment he absconded, it was clearly the case that his intention was never to repay the bank loan. And because of that, you can see, I'm not sure how many of you have watched these videos, where Vijay Mallya's personal assets, let's say he had many luxurious cars, all those were recovered by the, service tax department, excise department to recover the money. And even the banks are trying to sell all his villa, trying to confiscate all his property so that they can basically recover their loan. But the amount is so huge. But that is a very pure classical case where if he had not absconded here, where he just, run the business badly, he would have considered a defaulter and not a frauder. And in that case, corporate will would not have been lifted. But the person was never intending to pay the basically loan because he was partying, he was spending money there, and he was not paying the bank installment. So he was considered a willful defaulter. And that is a very clear case that he always had the intention to defraud the bank. Okay. Now, now we started this discussion with the manager and manager and the owner. Now be very careful. Yeah, Kingfisher. This is the place where we are talking about. When we talk about company, because there is a separate personality, because there is a separate entity. You know what is the benefit of company? Let's say I'm right now a finance person, right? You guys are a finance person, but I'm not good at management. I cannot talk about you, but I'm not good at management, right? Now, I'm not good at management. Now, what will happen? Because this is a separate entity, I can ask a professional who's very good at management. I will ask them to run the company. and these people are known as directors. So please understand, even law, because these practice actually help business grow, law actually mandated that company will only be run by directors. Okay. If you are the owner, you are the owner. You will appoint the directors. You will appoint the directors. And if you want, you can appoint yourself as a director. But now there will be two capacities. First, you being a shareholder or the owner of the company. Second, you being the director. If you are acting as a director, you will always be employee. Okay. But if you are acting as an owner, then you will be shareholder. So there will be two different capacity. You as a director will be responsible for managing the affairs of the company. You will be responsible for making company profitable. Okay, basically complying with the law and requirement. All this will be compulsory for you as a director because you are responsible for running the affairs of the company. And here you are just an employee of the company. Okay, you are basically acting for the owners. So you are an agent who's working for the principal. Okay. So as a director, you will be an agent and you will be working for the owner as a basically owner will be your principal and you will be an agent. Clear everyone? So director are the only one who will run the company. Director and manager are same. They are different positions, Nandini. We will discuss very detail. You will basically, we will discuss this. What is CEO? What is CEO? What is, chairman? Okay, what is manager? Okay. They are basically separate designations, but their ultimate purpose is to run the company. Okay. Manager can be at any position. They can be at lower level management. Okay. Lower level management, middle level management, top level management. CEO, chairman will always be top level. They will never be lower level. Okay. One definition you can think of. Many of the time, CEO is the person who's running the company, but they need multiple employees. And one of them employee basically managing 100 employees. So that person would be considered as a manager, but CEO is the ultimate boss of the company. Okay, we will understand it later on because there is a chapter number 10, 11 coming on, basically defining what is CEO, chairman, committee. We will learn all that. Okay. So what we have understood so far about the company, companies have limited liability, companies have separate legal entity. Owner, basically the person who has invested the money in the company, they will be the owner, but company will be run by director. Owner, if want, they can appoint themselves as director. Director will be responsible for running and managing the company. Okay, just to let you know, this will be coming later on, but group of directors is known as board of directors. Okay, they make the decision together. Okay, all clear? Though not in this slide, but definitely will be coming later on in the next upcoming chapter. So we'll discuss there. So any doubt so far? Let's cover this slide and basically be done with it. This is so irritating actually. I hope the lectures is not getting boring. Any sleepy person? Okay. Okay. Yeah. So all clear. Thank you, Nandini. Okay, thank you. So far, I hope this continues. Really don't like this. I have to do it every time. Actually, today everybody is on leave now, so we can't do much about it. So let's read with me. Limited liability company identifies as X limited. Very important. Whenever you see, let's say ABC, if there is a term limited, that means this company is a limited by liability. This limited word is basically to show that company has a limited liability. So whenever you hear, let's say Reliance Limited, anywhere you will see that a limited word is always at the end. That means the company is limited by its liability. You cannot sue the company beyond its assets, right? Yeah. Sorry. Okay, how do you become a limited company? So what do? You basically register with the Companies Act. Okay, you need to file a fees. Okay, you need to file documentation. And one more thing, how do you basically become? You need a company secretary who will be doing all that. You need an auditor, ACCA, CA, who will be, verifying your information. We will come to that. One more thing that I want to discuss, that because you have a great power of a limited company, there is a great responsibility on you. Great power comes great responsibility. That applies actually exactly here. And that great responsibility is publishing your financial accounts. As an ACCA, what we can do, we can help company getting open. We will be basically learning the law, helping all the documentation of the company, basically filing documentation with the Companies Act, registrar, and also as an ACCA, we will be helping company to prepare financial statement. As an accountant, as a role of accountant, also as a role of auditor, we will be verifying this financial information. Can anyone tell me why company needs to publish their financial information? Okay, reasonable answer. Uh, mhm.
जितने भी stakeholders होते हैं सर.
But why? Why do I need to publish that? Why? Why do I want them to get better information? Okay, one question. Okay, those who are saying raising fund are basically helping others to get a better information. But my question is, let's say sole trader. In case of a sole trader, if I'm running a shop, I'm not supposed to create my books. Why? Should I not give the information to the person that they can basically lend me money? Tell me.
No.
Why?
Because you will be put at a disadvantage with your competitors.
So why not company? Company will be disclosing information. Company is a large organization. They also basically disclose their information. They will be competitor disadvantages to show external partner if they are in profit or loss. But why, Lisha? That is my question. To compare the financial, that is okay. What you guys are suggesting is that we will be using this financial information. This financial information will be used for the purpose of comparing information, for the purpose of making better decision. But my question is why? Why it is compulsory for a company and why it is not compulsory for other person? That's why I said great power comes great responsibility. Try to link that. This is a hint.
Because the company के अंदर limited liability होती है. तो सर आप limited liability को आप इसका disadvantage ना डालो.
Very good, very good. This is the reason. Accurately said by your fellow student. So those who don't know, let me help you. You have a limited liability, right? So whatever are your assets, only till that amount you can be basically sued. Okay, only that much amount can be recovered. If as a banker, I have given you 10 crores of loan, definitely I want to know how much assets you have. Yes or no? Because you are a limited liability company, it puts me in a situation that I may not be able to recover my money. And that is why we need to know this information. And that is why law basically mandates company to publish this information. See, you are utilizing one of the most important basically benefit, being a separate legal entity, being a limited liability. So you are supposed to deliver on that. You are supposed to be ethical. And how we can know that? By you publishing the financial information accurately. And if you are publishing an information that needs to be verified by a third party, that third party will be called a auditor. And that auditor, we act as an auditor mostly as an ACCA, CA chartered. We guys basically try to verify this information. Why? Because we are financial expert. Okay, got the idea? Because some users are interested in financial information. That is okay, Savrit. But I hope you got the idea that we are responsible for publishing this information as a company because we have limited liability. So because this limited liability, we do not take the disadvantage. So that is why we try to publish this information. Law mandates us and not to other entity like sole proprietor. Sole proprietor would be basically responsible for his personal assets. That is why law doesn't mandate them much. Okay. To get enough capital to accomplish goals to move company, that is definitely mehak. This is also one of the saying. If you open a limited liability company and you publish your books, bank will be more confident in giving you loan. Whereas if you are a sole proprietor, you can see that many small organization businesses struggle taking loan. Why? Because their books of account are not properly maintained. And because their books of account are not properly maintained, they do not have published information. Nobody's cross-verifying this information. So bank doesn't feel the confidence. If they give their money, what if, the books are cooked, books are not, correct. And what if they basically the person would run away? Where would they would be recovering the money? So companies get a better leverage of, utilizing that limited company because they are publishing information. So they will get a more chance of taking loan. So far good? Everyone? Okay, definitely what you have mentioned, public investing in money, people, utilizing information backing decision. Definitely that is the case. That is why we use this financial information, but we mandate it because company has an advantage. So we try to leverage, basically level up the game for every player. Okay. Now coming up here again. So limited company identified by X Limited, or in UK, a public company is defined by PLC. Okay. This would be for private company. This would be for public company. What is private company, public company? We will discuss later on. I think this will be become too detailed discussion right now. So we will take a break. After that, we'll discuss private and public company. Again, private and public company is different from public sector and private sector. Be make sure you make distinction, because student constantly ask me, okay, Vishal, what is difference between public company and private company? What is public sector and public company? Do not confuse. We are talking about a company. There is a public and private company. Okay, no government involvement here. But public sector, private sector, we are talking about sectors, not organization. Public sectors where government is involved. We'll discuss this later one more time, because I know some student will still be confused. Okay. So if there is a limited term, this will be a private company. If it is a public company, it will be PLC. So if you look at any term that is PLC in UK, this is specifically for UK. India, we have a different term. So if there is a PLC, public limited company, this PLC means public limited company. Okay. Are legally separate entities from their owner. Okay. And known as shareholder. So owner who have invested money, they will be shareholder and they will be separate from the company. One big benefit of shareholder responsibility for the company, that is limited to the money they have invested. So the basically liability will be limited to the assets. Advantage of PLC and limited company, easier raising capital because bank will be more confident. Separation of ownership, because now owner is different, the company is different, there will be limited liability and they do not have to manage the company. That can be done by the directors. Okay. Disadvantages, very high administrative cost. Even if I talk about my company now, only in accounts and legal department, there are 1,000 employees. Only in accounts and legal department. Just think about the cost they bear. So running a limited company is a very costly and very administrative task. You need to comply with lot of laws and regulation. Everything needs to be documented. Everything is formal. Nothing goes, unnoticed in the company. So it is very high administrative. Burden, especially for company listed on stock exchange. What is stock exchange? We will discuss some later time. Okay, later. There is more paperwork and basically cost. Like I said, highly administrative, highly legal compliances, less privacy. Again, because you are a limited company, you need to publish your information. Even you need to basically conduct shareholder meetings. You need to conduct meetings with the shareholder and you will be basically disclosing your strategies, what will be basically doing in the future. And now you need to basically balance out things where you will be informing the people who have invested, okay, how we will be doing it. And second, at the same time, you will be trying to, keep it confidential so that your competitor doesn't get advantage of it. Right. And this is very problematic for the company. But this is the case because you have a power, so you cannot escape this responsibility. Type of company, private limited company will be X Limited, like I mentioned here. They will be called, let's say, limited here, 3 words. And if it's a public limited company, it will be called a PLC, public limited company. Okay. We will just understand what is public limited and private limited in a moment. Now, tell me, do we need a 5 minutes break before we start? I don't want you to, overconsume with the information. Is private company also mandated to disclose their statement? Yes, Nandini, yes, but not to a very extent. We will understand this. Basically, this is a law subject matter, that how much information private company needs to publish. Just to let you know, public company will be required to disclose most of the things, whereas private company does not require to disclose most of the things because they are not listed on the stock exchange. Okay. Private company, you can basically access their information by paying a fee. Private company, you are allowed to access their information. You can just pay a fee to the registrar of the company and you can access their books. But public company will be free of cost. Okay. Let's take a 5 minutes break, guys, or 10 minutes. 5 or 10. Any? Okay. So let's take a 10 minutes break. And one more thing, just before we go. I'm trying to make this class 3 hours, okay, because we have right now maximum number of students, because we have a FA class just after this class. We have a FA class at 12:30. So I'll try to schedule that class. I'll try to discuss and try to schedule that class in the evening time at the 6 o'clock. And I will try to, from next week onwards, this class will be 3 hours. I hope this is fine. 10 to 1, right? Okay, so that we have more time to discuss the concepts, and we can basically quickly also finish our syllabus. Okay. Okay, thank you. Okay, let's have a 10 minutes break, guys. Are we back, guys? Mehak, Jia, Ashwi, Nandani, Jeet, Ritika, Parmeet, Akshita, Abbas, Kuldeep, Lesha. Yes. One student name is coming Samson. Can you tell me your name? It's very difficult to call you Samson number. If you're comfortable. Okay. Okay, Tripti. Okay, sorry, huh? I didn't know your name. It's helpful for me to talk to students' name directly. Now, so we have covered a very important concept, limited liability, and we also understood the uh, basically the ownership and the control part. So you can see, as I told you, uh, that this single slide would cover, if you remember, I told you that this single slide would cover majority of your, chapter. And this is what we were doing already. So public limited company and basically private limited company is just coming. Uh, so what we discussed so far? Yeah. We have discussed ownership, that organization can be based on basically private sector, public sector. Organization can be based on, controllership, basically owner, manager, a sole trader, or basically, let's say a company example could also be here. That company run by director and basically owned by company run by director and owned by basically shareholders, right? Now, activity. Basically, this is already we are going to discuss basically type of sector. So I'll just skip this point. Okay. In a moment, we are going to discuss. Okay. TBD, to be discussed later. Okay. Just coming about this basically organization based on manufacturing and service. Okay. Profit and non-profit orientation. Let's discuss this one. See, an organization that is commercial and wants to earn profit will be a profit organization, profit oriented organization. 90% of the organization, 90% of the business organization are commercial, profit oriented. Yes or no? Right? But there is also some organizations which are non-profit making. Okay. And these organizations can be either NGO, non-government organization, or can be NPO, non-profit organization. Now, when I say an NGO, see, the word is itself says that no government involvement. Okay. And their purpose is to, serve a cause. Let's say elderly healthcare. Okay. Elderly healthcare. They want to take care of the elders because many elders struggle with their financial wealth. Child take care. Okay. Let's say there are many organizations that work for stopping the child abuse or child labor. Let's say there is an organization named as Cry. It's a very popular organization. Or maybe you have heard a organization named Being Human, which is run by a celebrity in India, right? Being Human, basically Salman Khan is basically running this organization. Okay, very popular organization. And then there can be educational promotion organization. That purpose is to promote organization, basically promote education. Let's say promoting education for schooling, or even let's say they're promoting education for investors. Let's say some of the stock exchange, let's say in India, they promote free education for investors, right? So there are multiple non-government organizations, but because if let's say this is run by a government, then it will be an NPO, not NGO, because NGO has to be non-government organization. But if it is run by any non-government organization, it will be an NGO. Now, what is NPO? This is basically a very simple difference, but let's cover it quickly. Not here. Yeah. Classes. What classes? I didn't get your question, Mayank. What was the classes? Which classes? Basically, I'm talking about profit and non-profit organization. Profit organization is the one that basically is running the business for the profit. Okay, classes. I'm talking about FA class will be shifting to 6 p.m. I will announce in the FA batch. And these classes which we are currently running, they will be basically 3-hour class. Currently it is 2. It is 10 to 12. But from next week onwards, next Saturday, Sunday, we will try to make it to 10 to 1. Okay, ma'am? Now coming back here. So NGO, basically a non-profit organization running for a cause. Okay, that cause can be anything. And NPO. NPO is basically a registered organization. Registered organization, basically, especially in company. In India, Companies Act basically ask any organization that is running for a non-profit purpose, basically registered in Section 8 of the Companies Act. That is in Indian Act, okay, not in UK. So an NPO basically is an organization that can be governmental and that can be non-government. Okay. Any person can open an NPO that can be government oriented and non-government oriented. If they are registered, okay, under the Section 8 of the company as per the Indian Companies Act, so they will be considered a non-profit organization. Now, the difference between NGO and NPO is very thin. Okay, let's say this is a person, this is a basically a non-government organization, and no, NGO is always non-government organization. In NGO, they receive mainly donations. Okay, they serve for a cause. Okay, they raise donation and they basically serve for a cause. But in NPO, you get members. Okay, and they pay subscription fees. Okay, they pay subscription fees. Definitely, NPO sometimes also receive donation, but they are members in the NPO and they pay basically subscription fee through which NPO runs. Any profit, any profit in NPO is known as surplus and any loss is known as deficit. Okay, they do their proper books of accounting. They do their proper books of accounting. In NGO, this is not mandatory. But in NPO, if you are registered as an NPO, you are supposed to create your books. Okay. NPO will be basically, can be profitable. You are never restricted to make a profit, but definitely NPO is open for a non-profit purpose. So you will be basically primarily looking at that purpose. Yeah, NPO doesn't give the taxes. They don't pay the taxes. Okay, if they are registered as an NPO, they take the benefit of NPO. They have to register as an NPO, and then they will only get the tax benefit. Yes, one thing is, let's say the money cannot be withdrawn from the NPO. Money has to be taken within the NPO, and there are multiple conditions. Basically, depending on country to country. One condition I remember is basically the trustees. Basically, in the NGO, there are trustees. And in the NPO, they are basically governance. So the person who will be governing the NPO, they will be responsible for the NPO take care. Any fraud or anything that happens in the NPO, the person will be responsible. So there are certain conditions and these conditions are very strict. If you follow that condition, only then you will be allowed. Let's say if I talk about in Indian context, if I am basically a person running an NPO, my friend actually runs an NPO. He needs to get his file duly, with the income tax office. His return will be submitted within NPO filing return. These are some of the conditions. And then they need to mention there basically the cause. Let's say he's promoting the sports and he's running in a sport organization. So they're taking the tax benefit. So NPOs mostly run for taking the benefits and basically they earn the profit. But that profit is basically used for the purpose of that organization and not taken by the members. Okay. You do not take the profit from the NPO. NGO do not normally make any profit. NGO only basically serve the cause. Okay, in the last batch, this was a discussion. Let's say there is a foundation known as Isha. I'm not sure how many of you are aware. Isha is a foundation run by basically a popular guru, which is known as Sadhguru. Okay, they run this foundation and they also sell the product. So this Isha Foundation is an NPO, basically registered. They are tax exempt, but at the same time, because they are serving multiple cost factors, you can also categorize them in an NGO also. So the difference between NPO and NGO is very thin. Okay, normally in questions you won't be asked, okay, what is an NPO, what is an NGO? The idea is very simple. You are non-government oriented, you can categorize yourself an NGO. But if you have registered for basically taking tax benefit, you will also be an NPO at the same time. Okay. So NGO basically don't have income, so they don't have to, pay taxes. Okay, if you have income, Lisha, in that case, register yourself as an NPO, you will get tax benefits. NPO only receive donations, and donations are exempt. Let's say many political parties get donations, right? And political parties always exempt from everything. Akshita, I will say this is a FA lecture, doubt and many students are asking. I will say, do not join the live class. If you want, you can. The class is already at the, end at its end, and we are right now using advanced topics. I cannot go on the basics and basically teach you the basic topics right now. Okay. If you want, you can, but I'm not sure how much you will get it. Okay, Akshita? Any other query?
How does NGO raise?
Basically through events, they raise events and basically try to promote the awareness, and then basically they try to basically ask for people to donate. They can also take the sponsorship. I'm just saying, if you are NGO, normally any entity would be an NGO, but to become an NPO, you need to get registered with the Government Companies Act, or basically whatever the act of that country is, and then you will get the tax benefits. An NGO, basically, you can run an NGO for the purpose of causing and may not be registered. Okay, so these are very small differences and very blur line if you want to differentiate between NGO and an NPO. Okay, any other doubt? Okay, all clear. Now we have discussed this one. We were discussing limited company versus partnership is the one that is remaining. Source of funding. Okay, let's first of all cover this, and then basically partnership and public and private limited company. The road is over 3 times. It's getting irritating. Okay. So far, all this for clear. Now, small size and medium size. See, businesses are small. Let's say shops, vendors. Okay, they are small businesses. They are large businesses. Let's say one large business will be Walmart. Okay, shopping complex where you go and buy. Let's say Apple organization. Okay, Apple, we know that Apple is one of the largest organization. Let's say Louis Vuitton. Okay, one of the largest organization. So they are multinational organization. They work in multiple countries. Multiple countries. Okay, let's say India, USA, UK, Australia, right? They have basically presence in multiple countries, and that's why they are known as multinational companies. They are large organizations. Okay, small businesses normally within a state, not even multiple country, but within a state normally. Okay, single shop normally. Medium-sized businesses, let's say you have multiple branches. Okay, multiple branches. Let's say within multiple states, or maybe one or two branches in foreign. Okay, so size, I hope we all can understand that small businesses basically are where you are running shop, and normally small businesses or medium-sized businesses are family-run businesses. Okay, and this is one thing that I want to point out. The reason that small businesses or medium-sized businesses remain small and medium is because one particular thing called delegation of work. And one more thing, which is called documentation. Delegation of work and documentation. It's very easier to basically say, why not open a large organization? But the problem is, you have to pass on some control to some people you are hardly trusting. You have to pass on some power to your employees. And it is risky for the owner. And also, if you are passing this, control, in that case, you need to bring the documentation, formalization. Many businesses, especially many small businesses, cannot scale up because let's say if I'm running a shop, what if I am told to, leave the shop in the hands of my employee for 10 days? This is risky for many people. Just talk about, delegating power for opening multiple branches. This is one of the struggles that people face. And if you can overcome this struggle, definitely you can scale up to medium and basically large organization. And this is how, it starts. If you talk about insurance business, if you talk about, how many of you heard basically Goldman Sachs or JP Morgan name? These are one of the largest investment banks. And you would not believe they only started with a very small business. Now they have thousands of employees across the globe. These are the business from 1920s and not basically today. But because they were able to delegation, they were able to, make the formalization properly, then only they could scale up. Okay. Now, source of funding. So far clear? Any doubt here? So when they get donation, they can use for personal reasons, or it has to. No, Nupur, definitely. If you are getting a donation for an NGO or an NPO, you are using for that purpose. If you are misusing that fund, that will be considered fraud, Nupur. Okay. But about the size, is it clear, everyone? Okay. Okay. So remove all this so that we don't have to waste time. Now, coming back to this source of fund. See, in case of company, normally owners would be invested. Owners will be investing. Okay. This will be known as capital. Money that owners put in the company, that will be known as capital. In case of sole trader, basically share capital. Share capital. In case of sole trader, they will also invest money. This is also known as capital. So what is capital? Basically own money. Your own money. Right? Your own money. You are not basically, taking some other person money. But let's say if you want to scale up, and normally business need money. So what they would do if owner doesn't have sufficient money, so they basically go to banks for loan. So either you are basically financed by capital, basically your own money, you don't have to pay back that money, or you take loan, basically banks. Some people can basically, if they have good government connections, or basically they are running a project where government is interested in, let's say, electric vehicles, government is definitely interested in reducing the carbon emission. So projects like this, government is interested in, let's say, in, infrastructure project or scientific research. So government can also, fund the project. And this, sorry. Yeah. Government is interested in promoting a basically a project, basically sector, a company, basically because it is benefit for the or everyone. So definitely government will fund that. Definitely government funding comes with conditions. It's not like you are given money and you can utilize it anyway. Just like a loan, basically loan puts components or conditions. So similarly, government also puts condition when they provide the funding. Okay. Use of technology, complexity in production. Okay, got it. So this point, what is saying that sometimes you need finance as a funding. Oh, I think this is actually, oh, I cannot. Sorry, this point is actually merged right now. This point is merged. This is actually bottom point. This is bottom point. Technology. Technology is a bottom point. So you can segregate a company based on technology. Let's say some companies are traditional, some companies or some organization. Some companies are traditional approach, basically more manual labor, right? But some organization are basically highly production complex, or let's say high technology. One example would be Tesla manufacturing. You can see that they use robotics to manufacture a car. And this is Mr. Elon Musk, that this is what he promised to the shareholder, that in the future, he will be basically scaling up this business where only robots will be there. No engineer, nothing. So cost will be reduced to zero. Basically, they have set up the cost. Now that cost will be spared basically over the years, and they don't need to incur the cost of labor. So their cost will be reduced, and Tesla car would be basically making huge profits. Okay, so this is the vision of Mr. Elon Musk, but this is basically what I'm trying to say, that this is a very technophile company where technology is highly integrated. Right now, we are taking classes. We are basically using projector. We are using our team channel. So this is also technology integrated. So you can see the technology involved here, right? And some are traditional based approach businesses where technology is not very integrated, where they still basically sell from the old method. Let's say trading, not trading, basically trading of goods. where if you buy and go to your shopkeeper, they will be basically using the simple method where you come and then they deliver. But if you talk about the technology business, let's say Flipkart, Amazon, these are the businesses which are using the traditional business, selling the goods, but at the same time integrating the technology, where they can basically provide the goods to thousands or millions of customers in a single day and track everybody's, basically where the goods are currently delivered, when will be they delivered, and at the same time updating their inventory level. So this is basically integration of the technology in their business. And this is a very highly technophile organization, right? So type of basically organization based on technology, based on source funding, based on size. Now coming back to our original point, partnership and public and limited company. So first of all, understand the public company and limited company. Public company, sorry, private company. Question. So can government also take loan? Yeah, government takes loan, Krishna, and we will understand in the macroeconomic chapter that how government takes loan, basically the cost, and how government taking loan impacts the inflation, impacts the taxation, impacts the individual income. Okay, this is macroeconomic chapter, Krishna. Okay, public company and private company. What is public company and private company? So far, we have understood a company is limited by shares. Okay, they have liability for their assets. They are separate person. Now, there are two categories of company. One is private company. Private company mostly will be small company. Okay, small and medium-sized business. Normally, it's not mandatory. They can be very large organization, but the company will be mostly private. Okay, what private company would do? Basically, they will be small shareholders, very few shareholders. Not mandatory. Again, I'm saying this is not mandatory. Okay, but there will be few shareholders or members. Okay, they will be basically using their own money. Own money. Whatever friends, family basically bring up, that will be the money put into the business as a private company. But when I say public company, and this is what I tell students to have a very clear understanding. If I, ask a chartered person, what is a private company and public company, even they make confusion. They will tell you, okay, private company will have 2 members, public company will have 3 members, there will be 2 directors, there will be 1 director. These are the things. No, main distinct is not this. The main distinct between private company and public company, that public company can raise money from public. I can invite not only my friends and family, but I can invite thousands, lakhs, millions of people to invest in my company. And that is only permitted to a public company. And for that, a public company needs to register on a stock exchange. Okay. If you register on a stock exchange, then only you can basically issue your shares. Okay. And then people will be paying money for that share. That is a public company. What public company is? That you are inviting people to invest in you. In a private company, there is a limit. Basically, let's say 1,000 or 200, depending on the country. In India, it's 200. I'm not sure whether it is updated or not, but in UK, it is majorly, let's say 1,000. But if you go beyond that, if you want to go beyond that, then in that case, you need to register yourself as a public company. You want to invite basically money, then in that case, you need to raise money. You don't want to take loan. Okay, let's say you don't want to finance your basically money from the let's say loan, because loan you will have to pay interest. So what you can do, you can sell the ownership of the company. Let's say you are owning 100%. So what you will do, you will say, okay, I'm basically selling 20% of my shares. 80% will be owned by me and 20% I will offer to the public, and public will be paying money for that. And that is basically stock exchange listing. That is basically where you take the money. Public company, private company, clear? Public company, private company is only related to company. Here, government can also invest, but doesn't necessarily make them public company. Public where, there can be many public companies where government is not invested. Reliance is an example. Tata is an example. No government is involved with them. Okay. They are basically a public company where they have invited money from the public. In private company, you are basically owning the money, basically company where few shareholders, friends and family have invested the money. Okay. That is the difference. Public sector, private sector, very different. Public sector, private sector, where public sector, government is involved, and where government is not involved, that is public sector. Sorry, private sector. For public company, private company, this is related to company only. Company, if invite money from public, that can be basically public company. That invited company can be government also. Doesn't matter. Still public company because they have registered themselves in the stock exchange. Private company, no stock exchange register, only few friends and family. Clear, everyone? Fundraising done by public. Okay, good, Krishna. Okay, public listed stock exchange, private limited, not registered. Very good, Mehak. Public company is owned by public. Yes, you can say because they are buying shares, so that is owned by share. I can now basically become the owner of Reliance by buying share of the Reliance. But I will be a very small shareholder. Let's say I invest 10,000, 20,000, 1 lakh, 20 lakh, even 10 crore. Even then, I will not be a 1% shareholder of the company. I will be, let's say, 0.%. I will have a very small percentage of the company. Okay, that is very insignificant, but I will be the owner. Okay. Okay, so let's discuss it. One of your friend has asked. So far clear? We will discuss the ownership now. Public companies, those companies where government can't invest, where government invests, but it doesn't mean that government or government. No, no, no. Yeah. Public company where government can invest, but they don't. Okay. Public normally invest in public company. Okay. Normally you and me as an individual, we will be providing our money to the public. Okay, Savrit? Lisha is public company is under private sector. Lisha, public company can be private sector, public sector. Private sector and public sector is defined by ownership of the government. If your government doesn't have, if your government doesn't have the ownership, in that case, that is a private sector. Okay, a private sector company will be a public company. Okay, Lisha, if government is involved, in that case, that public company becomes a public sector company. Okay. Now, your query coming here. Okay, please note that the last notes I shared in the class, that will be only available. These notes will not be available because there is an auditing problem. Anyway, what you would do, I do, so much mess in the notes. I hope. Okay. Ownership. This is called control. How do you control a company? If you own more than 50% of the company, then you are assumed that you will be basically in a position to make decisions. Okay. This is basically called control. Why this is 50%? Because whenever we need to make a decision, in the company, let's say a company is acquiring another company. Okay. Or let's say a company is, opening a business in onshore or basically in the foreign country. These are some big decisions. So what happened? Though company is run by director, but director need approval of shareholder for big decisions. Basically owners. It's not like because we have given the company to the director, they know a better understanding, definitely, but they need to take our permission because the risk is ours. Shareholder have invested money, so risk is with them. So definitely to make the decisions, basically any major decision that can change the company, you need the approval of shareholder. Okay. So if you need the approval of shareholder, so you need 50% more than majority. And that is why if you own more than 50% of the shares, that is why it is easier to make decisions. Okay. The basic idea is that you can get the decision done. Let's say there are 3 shareholders. One is owning 40%, rest are owning, let's say 30%. Now you know that decision can only be made if 50% voting done. Right? Let's say this is Mr. B, this is Mr. C, and this is Mr. A. Now you can see right now, unless at least 2 people come together, decision cannot be made. Right? So in this case, either Mr. A goes with Mr. B or Mr. C, or Mr. B goes with Mr. C. Even then he can make a decision. Yes? But let's take another example. What if Mr. A owns 40% and then rest 60% is owned by thousands of individuals. Rest 60% is owned by thousands of individuals. Now, in order to make decision, if Mr. A basically proposes, he only need 10% shares. He only need 10% basically voting. But in order to make these 1,000 people decision, they need at least, they need to come together. They need to decide. It will be very difficult for these 1,000 people coming together. But here, Mr. A owns the majority, and that is basically almost majority. So all he needs to do is only basically take 10% of the shareholder in his favor. So most likely, Mr. A will be making decisions. So that is why control will be with him. So control is definitely not only 50%, it can be lesser, but if you have more chances, if you have more influence, then definitely you can make the decision. And it's a classical case of Reliance again. In Reliance, the Reliance family only owns 48%, and rest is owned by the institutions and rest of the shareholders. But still, in Reliance, Mr. Mukesh Ambani and their family makes the major decision. Why? Because they know that they only need 2% people to make the decisions, and they can easily influence that because they are in a better position. They are basically at the management. They are running the company because they have appointed themselves a director. So they are in a better position to convince. See, we understand this position better, so convince with us. And only 2% people need to basically be convinced, and they will be making decision. So they are still in the control. Clear with this? Can government company ever acquire private company? Yes, definitely they can acquire. Government is interested. Let's say I'm running a scientific research, Randhari, and that scientific research is very significant for the public. And though I'm not just a private company, no, nothing is basically. I'm not inviting anybody. I just have a, let's say, COVID formula. There was a COVID pandemic situation, so I have a formula which can cure the COVID. So government can basically ask me to get acquired. Definitely, I will be consenting to that. Only then government can do that. But government definitely can basically come to me and basically get my acquisition done. That is very normal thing. Okay, but then it will make private company, if government is invested, then it will make the private company a public sector company, Nandini. Okay, so public sector, private sector only because of the government involvement, otherwise no. Okay, Nandini? Yes or no? Okay. So this is all we had discussed. We are only left with partnership. Let's discuss the partnership. So far clear about private sector, public sector, owner, manager, manufacturing. Oh, manufacturing service is pending, still pending. Profit, non-profit, legal company, limited company is already discussed. Small business company, medium size, source of finance and technology. Everything clear so far, guys? All clear? Now we will be discussing partnership. Yep. Okay. Now partnership. Can anyone explain what is partnership? Okay. 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 Okay.
And so they share their profit and losses and their respective ratios that they've already mentioned in the partnership.
Anything about company? Partnership. Partnership. Mhm. Okay. Okay. Very good. Partnership, guys. When two individuals come together and run business to gain profit with unlimited liability. Oh, very good. You also mentioned unlimited liability. Very good. Max says between two or more person agree to start business, share the income and losses. Okay, income and losses. Two or more people come together, form a business, set profit and losses. Krishna says the partnership is in relation between a person who agreed to share their profit and loss owned by all, any of them is acting okay, very good, Krishna, very good line. One acting on behalf of them, all of them. Okay. It is formal agreement between two or more person to become co-owners. Okay, Akshita, fair answer. Where two or more person come together to do the business, here main aim is to earn profit. Very good. Partnership is an agreement, what's the brief, between two or more partners sharing profit and losses. Also, there is a written and oral agreement between partners. Okay. When two or more people come together to share profit of the business run by all or any of them. Okay, fair enough. So, majority of you are correct. Partnership, if you want to start a partnership. See, I would not compare partnership with a limited company. Rather, I would compare partnership with a sole trader. Sole trader have limited, basically unlimited liability. Unlimited liability. Basically, sole trader will be responsible for their personal assets if the claim comes. Even partnership is also responsible for unlimited liability. So business model is basically almost same. They are running a small, medium-sized business. Partnership is basically small or medium-sized businesses in both cases, in partnership and in sole trader. The difference is there is a single individual. Whereas in partnership, there are two or more individuals, as you mentioned correctly. Now, they will share profit, losses, and if they need to make any decision, they need to agree for that decision. If there are two people, those two people have to agree, otherwise decision cannot be made because there will be 50-50 chances. Okay. But if there are three people, in that case, at least two people need to agree. Okay, because it will be 2/3 majority. So, but in case of single individual, it will be run by a single person. So no decision making delay. No decision making delay. Here, decision making will be definitely required. Okay, and this can basically delay the process. Now, in sole trader, single individual necessarily won't make financial statement. Okay, won't make financial statement. They can keep the books of account to know the profit. Normally, businesses keep the book to know the profit level, profitability, assets of the company, assets of the organization. That is the only reason they do. Okay, or maybe taking the loan. But in partnership, it is natural. It is not compulsory, but it is natural that you create financial statements. Why? Because you need to know what is the profit so that you can distribute it between yourself. Okay, because there will be two or three people, you need to basically distribute profit between them. So that is why it is natural that you create financial statements. Though it is not mandatory. There is a partnership act. There is a partnership act that governs the partnership. Okay. Clear so far? Any doubt? Agent principal relationship definitely jhalak, because this line, let's say one partner acting basically will bind the other's partner. The problem with the partnership and the beauty of the partnership is that if you act, whatever contract you form as a partner, that will be applicable on your other partners. You cannot escape that, okay, this partner actually formed this contract, we were not part of it. Is no. If you have formed a contract, then your partner will also be basically bound by that contract. That is the beauty and that is the danger of partnership. Okay. Right. Because the partner is signing in the capacity of partnership firm. Right. So that is why one partner basically binds the other partner. So basically partner is an agent of the partnership firm. Okay. Valid point. Okay. Yeah. Coming to that LLP. Coming to that. Now you can see partnership has many benefits. Right, you have one or more individual, okay, because now you are getting second opinion, the person is also bringing capital, right? Whereas in case of company, there are fewer more individuals, but the problem with the company is that you have to basically be a lot of administrative cost. There's a lot of administrative cost, there's a lot of legal compliance cost, and you have to pay fee to chartered accountants, basically ACCAs, company secretary. This is also hectic. So what do? We want to enjoy a limited liability, but the problem is that we don't want to bear these costs. And that is why government came up with a solution. So partnership clear now? Now. Sorry, थोड़ा तेज बोलो. हाँ? Oh, partners are the owners. Let's say you and I open up a partnership. Let's say we decide, okay, we'll be opening our consultancy firm. Okay. Now, whenever we need to make decision, you and I need to agree. Let's say we are basically partners. We all are partners. So majority will be deciding the partnership. Let's say this is a meeting room for the partners, and let's say people, let's say there are three, four, three. Yeah. So majority of the people will be decision. This is what you're asking, no? That majority of the, so here we will be basically deciding ourselves, okay, whether majority agrees for the partnership option. No, there is no shareholder in the partnership. Okay. Shareholder basically are not required. You can also speak in Hindi. It's fine for me. Okay. Don't need to be nervous around me. The partnership only has partners. Company has shareholders. Okay. Now, because we have understood a problem that, partnership has a benefit, but still it has unlimited liability. Okay. And if we open a company, we have to bear the cost. Partnership has partnership benefit. Okay. But the problem is still with the unlimited liability. Okay. And we cannot go and open company because it's very costly and it's heavily regulated. Okay. There are penalties and fines if we, not comply with the requirement. So there was a solution which is called LLP, also known as Limited Liability Partnership. Now, the purpose of this LLP is only to help partnership get the benefit of limited liability and separate legal entity. Okay. Now, in this LLP, only very few individuals will be required. Basically, 2 or 3 people can open this and okay, minimum capital. And the regulation will not be very heavy. There will be regulations, but not as heavy as companies. So this is a medium form. Either you can open a partnership, but the liability will be unlimited, or you can open a company where liability will be limited, but the regulation will be heavy. So this was a very new concept. Like this was introduced in 2002. This is not a very old concept. Company is a concept like from the 90s, from 1900s. Okay, so company is a very old concept. But because there was a demand that, okay, we as a small businessman want to get the limited liability, so let's open a LLP. Okay, so LLP is basically a partnership, but the liability is limited. Clear, everyone? The same thing will happen. All partner will bound the act of the other, but now the limited liability will be limited to the assets of the company. LLP will be a separate legal entity. Okay. So this was all from the type of organization. Hopefully you got the idea. Sir, all partners' liability is limited to a few individuals. Till the assets, till the contribution they have basically made in the partner. Let's say there is a partnership. We open a partnership of 10 lakh, where I bring 2 lakh, you bring 3 lakh. So we will be responsible to basically contribution of capital. Okay, Jalak? So there is a chance in fraud. Definitely, if there is a fraud in the LLP, in that case, you will lift the corporate will, Krishna. Just like in company's case, you are given this power to protect you, not to misuse this power. And also, in case of company, I forgot to tell that LLP financial statement will also be published. Okay, just like private company or public company, their financial statements are published basically for readers so that they can be cautious whether to deal with this LLP or not. So similarly, LLP books of account will be published. Okay, Krishna. So all in partners liability is limited of individual. Okay, got it, everybody? Any more doubt? No. See how much we can cover. So this chapter is almost finished. Now these are the basically sectors which we will discuss. Okay, let's cover this at least and then we'll wrap up the class. There is an agriculture sector. Okay, these are talking about sectors of the business. Okay, where we see the businesses. Let's say there is an agriculture sector. If you are into farming, okay, then this will be an agriculture sector. Yes or no? Let's say you sell fruits, right? So selling fruits, vegetables, this is an agriculture sector. If you are in manufacturing sector, you produce things. What is manufacturing sector? That there is a raw material. Let's say in case of our needle example, we took the metal. Metal is our raw material. It is raw. It is not changed. Then we basically apply some labor and technology. In manufacturing sector, we apply our technology, we apply our labor. Basically, we process. We apply some process, production, and then we turn them into a finished product. Just say there is a car example. If I have a metal, if I have engines, I will be manufacturing them, and then basically labor will be there to assemble all these things, and then finally a final product, a car will be produced. If you look at the raw material, it will be only metals, oils, and basically some gadgets. But if you assemble them, manufacture them, and then basically make it a finished product, only then it's basically become a product to sell to the consumer, and that is manufacturing. Okay, basically going now to the service sector. Yeah, service industry. That is why I skip that part there. What is service? Let's say I'm providing you guys service. What is the basically raw material in the service? Well, my knowledge. And what is the processing? When we are teaching, when we are studying in the class, the processing happening. And what is the output? You getting the knowledge. The difference between manufacturing and service industry is that manufacturing have different stages. But service industry, most of the things happening at the same time. Okay. At the time I'm providing you service, at the time you're receiving it. Let's say I go to a salon. I want to get my hair cut. Okay. So what will happen? So the barber would be cutting my hair. So he's providing his basically skill service of, hair cutting. And at the same time, I'm receiving the service. So the final product is what? Basically, they are providing us their service and I'm receiving it. And the input is itself basically their skill. So in service industry, the difference is that you are providing service simultaneously and the customer is receiving it. But here in manufacturing, you first need to produce the goods and then only at a later stage, consumer consumes it. So the consumption and the production is different, but in the service industry, it is same. Clear? Examples of manufacturing, basically car manufacturer, mobile manufacturer, right? Even let's say you are, let's say clothing manufacturer. Clothing manufacturer is known as meal. I just forgot. Retail, clothing manufacturer. What industry is this belong? Okay, I just forgot. Huh? Textile. Yeah, textile. This is textile. So textile industry, car industry. So all these industry, what they do, they manufacture. Now service industry. There is a retail, distribution, transportation, banking. You can see they are providing their services. And these are basically service industries. Okay. Educational, medical, hospital. Now, extracting raw material industry. What is this? Where you are mining. I hope you have heard where we try to extract the materials. Let's say some battery. What? Lithium. Right. Lithium extraction, or let's say oil extraction. So these are basically coming into the extracting raw material, refining, and then converting one source of or basically energy into another. So it's the energy sector. Many basically type of energy sector comes. Let's say coal, oil, or basically let's say solar. Okay. Retail distribution, very simple. In retail distribution, you buy and then you sell. You don't manufacture. The difference between manufacturing and retail is that you buy already finished product. You're buying a product that is finished and now you're selling it. So your purpose is basically as a mediator for the consumer, that you are buying from, let's say, from China, from UK, from Asia, from multiple countries, and then you are providing that good to the end consumer. So here you are just a retailer, not a manufacturer. Okay. Intellectual property, basically, let's say you have published a software, a technology, and now you're providing that technology to the world. For that, you are basically getting a royalty. So if you have created a technology, so for that, you can patent that technology. What patent means? That technology cannot be used by others without your permission. Okay. Also known as copyright. Let's say I have written a book. Okay. Let's say you are using BPP book. So you can see a C mark there as a copyright. What it shows that whatever basically book they have published, that is basically their property. Basically, they have applied their knowledge and they are basically right. They will be the only person who will be selling this product. You cannot sell this BPP book to any other person without the permission of BPP or basically any other basically book. Or similarly, if you have a technology, nobody can use your technology without your permission. Okay. Otherwise, if they pay you fees, then only you will allow them. That is the basically role of intellectual property. Clear, everyone? Okay. So I think that's it for today's class because we are already 12. And these are, I will recommend to read them once, but we'll cover them. These are very small things. We have already covered most of them, public, limited. Cooperative society is only pending, but rest of them we are already covered. Okay. What is profit activity, public services, charities, trade union is also pending, which we will cover next class. Local authorities, NGOs, and this is pending. Okay. Rest is already covered. Okay, stakeholder. Okay, very few topics are remaining, which we will cover next class. If we had only one extra, this chapter would have been finished. Okay. So, thank you all. Any question, do let me know. That's it. Yes. Okay. So please, yes, Krishna, do you have any question? Next class, please be prepared. Maybe we will have a 3 class, not confirmed yet, but I will try to have a 3-hour class. Okay, from next class onwards. And also we'll try to practice some questions because getting knowledge is not enough. We have to practice questions as well. Krishna, your question? Ashmi, I have already shared this note yesterday, so you will get it through link. There is nothing I can share today because all the noting I have done will not be basically saved. I already told the class. Okay. Today's noting is not, but tomorrow, next class onwards, I'll try to make sure that this doesn't happen. Okay, everyone? All good? Yeah, these notes will be available in the recorded, but people only watch recorded class one time, not again and again. Yeah, recording will be available, but what I know, the recording will be available by Tuesday or Thursday. Any question from you guys? No, nothing. We are good to go. Okay. Okay. Recording will be available. You can communicate with the VG team. They'll help you with this. Okay. See you next week, guys. Bye bye.